Thank you for the opportunity. My name is Marhaban Ramdhani W with the last 3 student ID number of 607.
Okay, thank you for the attention. Let me introduce myself. My name is Vega Putra with NIM 674.
Assalamualaikum warahmatullahi wabarakatuh. Thank you for the opportunity. My name is Anisa Tamara Madina, entry last name 540.
Assalamualaikum warahmatullahi wabarakatuh. Good morning everyone. Thank you for the opportunity. Let me introduce myself. My name is Syaifana Nabilah. My last student number is 610.
Thanks for opportunity. Let me introduce myself. My name is Afif and my student number is 680.
Okay, so first, Dilutive Securities and earning per share. Dilutive securities or dilutive securities are securities that can be overhead into ordinary shares so as to increase the total shares outstanding. As a result of this increase in outstanding shares, it will result in a dilution of earning per share. Second, example. The example of dilutive securities: 1. Convertible debt. 2. Preference share convertible. 1. A convertible debt instrument is a loan from an early round private investor, angels or VCs. 2. What is a convertible preferred stock? Convertible preferred stock are preference shares that include an option for the holder to convert the shares into a fixed number of common shares after a predetermined date. The value of a convertible preference stock is ultimately based on the performance of the common stock. Convertible debt or conventional bonds are corporate debt securities which, within a certain period after issuance, have the right to be converted into ordinary shares. Convertible bonds provide benefit like bonds in general, with the privilege of bonds that have convertible properties that can be converted into ordinary shares. Investors work with this type of bond want a sense of security in holding the bond with an additional conversion option if the stock appreciates significantly.
Here I will continue the discussion of the material. Okay, accounting for convertible debt implementation of the with and without approach. Determine total fair value of convertible debt with both liability and equity component. Next, determine liability component by computing net present value of all contractual future cash flows discounted at the market rate of interest. And the last, subtract liability component estimated in second step from fair value of convertible debt or is proceeded to arrive at the equity component. Okay, the journal entry at time of issuance: cash on debit, bonds payable on debit, and share premium conversion on credit. 2. Settlement of convertible bonds: A. Repurchase at maturity, bonds payable on debit, cash on credit. B. Conversion of bond of maturity, share premium conversion equity on debit, bonds payable on credit, share capital ordinary in credit, share premium ordinary on credit. C. Conversion of bonds before maturity, share premium conversion equity on the bid, share capital ordinary on the bid, share premium ordinary on the bid, and bonds payable on credit. 1. Induced conversion. Conversion expand on the bid share premium conversion equity on credit bonds payable on the bid share capital ordinary on credit share premium ordinary. Okay, the next convertible preferred share. Preferred stock is a stock that has property in the distribution profit. Oftentimes, preferred stock also has a conversion feature or can be converted into common stock. Convertible preferred shares, the primary stock security which the owner of the preferred stock can convert into ordinary shares in a determinate amount, unlike convertible bonds which are primarily debt securities, and the conversion of petition are equity securities. Convertible preferred stock securities are in principle securities. Therefore, the company still includes these two components in the company's equity. Thank you. The next material will be explained by my colleagues.
Today, I will be explained in slide 9. Journal entry. Number 1. At par value. At par value is cash in the debit to share capital preference in credit and share premium conversion equity credit in credit. Number 2. Converted shares. Share capital preference in debit and share premium conversion equity in debit to share capital ordinary in credit and share premium ordinary in credit. And then number 3, repurchase instead of converted. Share capital preference in debit and share premium conversion equity in debit. Retain earnings in debit to cash in credit. Today I will be explaining tips of dilutive securities. Stock option. Stock options are contracts issued by investors to be sold to other investors where the contract profit option or rights for the recipient to sell or buy a company shares underlying stock on which the option trading is based in the amount and at a predetermined price and is valid for a certain period. Stock options are divided into two types. Number 1, cycle option and path option. Option cost the number of the company outstanding shares to increase to still to earning per share. And then share warrant. A share warrant is an option given by a company to a warrant owner to buy shares at a third price within a certain time. The main difference between a share warrant and share option is the issue and type. Warrants are issued by the issuing company while options are issued by investors. Thank you. Today I will be explaining tips of dilute security. They have three. Number one, convertible bonds. Convertible bonds is the debt secures the profit and option feature for the holder to convert them into ordinary shares of the company after during or on a certain date after bonds are issued, usually at an exchange ratio determined on the issuance of the bonds. And then convertible private share. Convertible private share is stock that priority in distributing profits. Oftentimes, private stock also has a conversion feature or can be converted into common stock. Convertible private shares are the primary stock security which the owner of the preferred stock can convert into ordinary shares in a predetermined amount. Number 3, share-based compensation. Share-based compensation is a reward provided by a company that supplies goods or services which can include both employees and non-employees, where the compensation is in the form of share or direct recognition of an obligation, whose amount is determined based on the share price or the company equity instrument.
So, hello everyone, I'm Afif and I will present about complex capital structure. So, the complex capital structure is about the report for basic and diluted earning. Because the complex capital structure required complex valuation models that can integrate and prioritize the special treatment of individual share. Individual share classes in multi-class cap tables. As such, it's about a model stock as a EVERM or EPS. That is the example. So the following we outline potential dilutive securities that could change a simple capital structure into complex capital structure. So this is the example of complex capital structure. PT Hisam had outstanding shares of 10,000 ordinary shares and 2,000 shares of cumulative priority, not participatory 10% nominal for Rp 100 rupees. Each year is a paid priority stock dividend. On July 1, 1991 has 1,500 shares were sold, and on October 1, 1991 Westbrook has a treasury share of 1,000 shares of common stock. So what the calculation? This is about earning per share. So yes, here we go. This is the formula of complex capital structure. It's not changed a lot, but the EPS of a complex capital structure is operating profit minus priority stock dividend and weighted average outstanding common stock. So that's different about EPS from simple and complex.
Number is 610. Today I will continue our presentation and I will explain about how to calculate the earning per share. The example question in this case is PT Raf Internet will distribute retained earnings of 50 million rupiah. The weighted average number of outstanding shares owned by the company is January 1st, 2020. It is the starting position. The amount of share outstanding is 70,000. February 1st, 2020, 20,000 shares was issued. May 1st, 2020, buyback 15,000 shares. August 1st, 2020, there's a stock split. November 10, 2020, issued 15,000 shares. So, how to calculate earning per share that must be shared with these investors? The answer is we will use the table. Because calculating diluted earnings per share must be determined in advance. What is the weighted average number of outstanding shares held by the company during the period? So the table will give our information about outstanding debt 1 January until 1 February. The outstanding year will be 1/12 because 1 January until 1 February is 1 month. Number of shares will same with the starting position, that is 70,000. Stock split adjustment is 2, and we get the amount of weight number of shares by calculating number of shares times with outstanding year times with stock split adjustment. So for 1 January until 1 February, we get 11,667. 1 February until 1 May, we get 45,000. 1 May until 5 August, we get 37,500. 5 August until 10 November, we get 37,1500. 10 November until 31 December, we get 27,500. So we calculate all weight number of shares. The amount is 159,167. So, to calculate profit per diluted share is required to calculate all shares that have been outstanding. So, the earning per share formula is total earnings divided with number of shares outstanding. So, the calculation of the amount of profit per share earned by each investor is 50 million rupiah divided with the weight number of shares, the total weight number of shares, that is 159,167, so equal to 314 rupiah. That's all my explanation about how to calculate the earning per share. Hopefully can help you, and the next example will be presented by my friend. Thank you.
Okay, so see you again. Hello everyone. So I would like to continue our presentation about the calculation of EPS. So I would like to present about basic EPS calculation using the weighted average number of shares outstanding like one working paper. As follows, PT Sinta has a statement of comprehensive income partial. That means that all you have to do is about how to calculate the financial reporting statement. So it's about basic EPS, like income from continuing operation and gain from discontinued operation. So net income is 913. So this is about the calculation of statement of comprehensive income. So this because you have to find the number of ordinary shares outstanding according to the weighted average number of shares outstanding. It's abbreviated as the shares are multiplied by 110%. That means 110% is about 1,1.1 because that's a decimal. For 10% it's about share divided and multiplied by 3 for 3 split. For 1, this impact on ratio is known as retroactive adjustment to shares. So thank you very much. Have a good day and keep healthy and let's get it.